Hello, traders. Welcome to another daily analysis for February 9th. We are right at 2 o'clock Eastern Standard Time, February 10th, an hour into a London session. So let's take a quick recap. So today was another very quiet day, especially in the London session. There wasn't really much economic release. The only thing that it came out quite important was RBA government Lois speaks. And basically, it's important because people were expecting the RBA to basically, people were anticipating maybe they would be copy what RBNZ did for New Zealand dollar previously, which they talked down the currency. And as mentioned, the RBNZ statement was a huge surprise, and that's why you saw a large sold off in New Zealand dollar. And the reason it's a huge surprise because before we have RBNZ, we actually had the RBA meeting first, and that was quite positive in terms of the tone was quite hawkish. So people were expecting that RBA will, seeing what New Zealand did to their currency, because they also want a lower currency. Basically, all these exporting country for Australia all the way to New Zealand, Japan, they all want their currency to be a little bit weaker so that they can benefit from the trade. So since people were thinking that, okay, maybe they will repeat what New Zealand central bank did, but they did not do that. They also don't say anything about the overvalue of Aussie. So basically, it was a non-event. But because of that, we did have a few good sentiment flow into the New Zealand dollar, the Australian dollar. So that's why it's not a big event, but it did give Australian dollar a little bit strength during the London session. Hold on, sorry, 1 second. So that's pretty much what happened. And in New York session, we had the unemployment claim. Once again, it's not a tier 1 data, but that, of course, was once again shows you a solid job market for US and a continuation of a good fundamental data. And later in Asian session, we also have the RBA monetary policy statement. Remember, they had a meeting this Monday. They released a statement yesterday. Basically, nothing too much as a surprise. Pretty much the same thing. They think the growth is picking up, the inflation is getting better, and they cut the GDP forecast. But they also stated the most important thing was the GDP in Q3. They think it's just a temporary number. Now, Q3 was a big blow for Aussie because it was a contraction of 0.5%. And of course, when RBA think it's not a permanent result, then that gives an investor more confidence. But perhaps the most important catalyst today was once again the sentiment. First of all, we have the court ruling come out from US and basically halted the travel ban decision. They uphold halted the travel ban decision by the judge. That means that right now the tourists from the 7th country can still enter US. Right now, it's a loss for White House basically. So they are going to battle again in court, but that's of course a fresh positive sentiment for US. Means that the Constitutional Court is stronger to battle any presumption of dictatorship that some people actually had, and that's why we saw a lot of sailing into the US dollar. That's the first good sentiment. Second good sentiment is that finally Donald Trump made his first phone call to the China President Xi Jinping. This is a very positive sign because back then, they weren't in a good term, especially with the issue over the One China policy. So Trump today finally made a phone call to China Xi and reported to back up the One China policy. Now that's a very good sign of Chinese and US relationship. Of course, another positive sentiment for the US dollar. And The third thing is that Donald Trump announced in about 2 weeks' time he will have a phenomenal tax plan, and regardless of what he said, basically the presumption is that the tax plan will be a huge cut for corporation tax, will be very beneficial for stimulate the business, basically. So that's what Wall Street wants to see. That's what the financial market wants to see. So you not only have one but three sentiment today to fuel up the US dollar and the global sentiment. So it's a very risk on sentiment today based on what happened now. Then in Asian session, you have the trade balance data from China, which was quite positive. That's the fourth strength into our global sentiment right now. The trade balance shows increase in export, also an increase in import, and this alone, of course, helped Australian dollar tremendously and also stopped the dropping of New Zealand dollar. So equity market today end up green, and WTI oil market also climb up for 2 consecutive days. And right now, because of Chinese data, that will also be very positive for the oil market. So right now, again, the global sentiment has taken a shift. But just to let you know, tomorrow there will be a press conference between Donald Trump and Prime Minister Abe from Japan. That will be a very good event to trade. They will hold a press conference together, just like they did with Prime Minister May. So, of course, with this press conference, we do expect, I don't know how it's gonna go, but I know it's gonna be a lot of volatility. It's more excited than the one with Prime Minister May because there wasn't any attack from US to UK. Where in Japan, there was a continuous attack on their currency manipulations. So, and also they will, basically the more will be on the stake from the currency manipulation to the correlation between the military base in Okinawa, things like that. This will all be very, very interesting. So depending on whether they allow the press to ask questions, but you might have some sharp question coming up because basically he just attacked Japan, previously for many, many issues. But we will see how it pans out. Again, if the tone is friendly, that will be a very positive sentiment for US dollar, and will actually be positive for Japanese yen as well, but not in its terms that it will be strength. If the press conference turn out to be quite friendly, quite nice tone, then you can think that dollar yen will continue to go up. On the other hand, if the press conference turn out to be very negative, then dollar yen will drop. So right now, my global view right now for euro, euro has no major economic updates, and right now it's just continuation worry over the Dutch, French, and German elections. So the global sentiment as a pickup for US dollar and all other currency. So euro become kind of lag behind. So that's what happened to euro. Right now, it's quite negative in both sentimental strengths. So the only thing you need to know that euro still has some fundamental strength into it, as we have a promising economic data from 2017. But for March, we have a Dutch election. April, you have a French election. May, you have the second round of French election. These two events alone will, especially coming up to these two events, they will play a quite negative sentiment into the euro. Especially if we see a global sentiment continue to strengthen, especially in US dollar, Australian dollar. The euro, of course, on the contrary, will be put down. The strong sentiment from the court ruling today for US dollar, phone call to Chinese Xi Jinping, upcoming meeting tomorrow, and the tax plan announcement. This is all very good sentiment for US dollar right now. On top of that, I still will refrain from taking any daily trade from US dollar. The very simple reason, because the press conference is tomorrow. Now, if we don't have that press conference, or if we don't have any meeting this weekend, the US dollar will be a good buy. But because of that risk events, especially right now, any risk events can turn it upside down. So I would not take any daily trade for US dollar. On the other hand, you could wait to trade the risk events tomorrow, or you could trade more like an intraday perspective. for if you are interested to trade US dollar. For British pound, again, there's no major news, but right now the parliament all officially approved that Brexit plan. So right now, what lies ahead of is the sentiment of triggering the Brexit. So you have to understand, investor and trader are short-term memory. So when we are approaching March, we will have a new fresh sentiment from the Brexit, because then people will once realize this is happening for real, that the Brexit, the UK is going to leave. That I think will create a more negative sentiment than a positive one. Of course, it depends on how the negotiation goes. Right now, what happened is that you, again, I mentioned you have the 50-50 amount of traders and investors. One side of people who are favored for UK, that they took the advantage to invest in UK, and the other side of people who are bearish in UK, which seeing that the banking sector, especially the financial sector, are going to move their headquarters out of UK. So the sentiment is, I think, it's still leaning toward bearish side, but right now it's quite neutral. Fundamentally, it's neutral because GDP and economic wise is doing well, but inflation continues to be a risky element, and it will continue to pick up, which might further deteriorate the consumption, which will reflect in the GDP. So in the long run, it really depends on how pound perform and how the negotiation works. So right now, I think it's a neutral currency to a bearish side. We will have the manufactured production today that is tradable, but really not a major event because it's not a service production. So only trade it if you have a deviation. Obviously, you can pair up with the sentiment right now because the Japanese yen is quite weak. So if you have a positive result, you can buy pound yen. Where if you have a negative result, you can sell pound Aussie or you can sell cable. For Canadian dollar, the oil market continued to the upside today, 2 consecutive days, and this due to the Chinese trade balance, but also we still have a very strong force from OPEC. So oil market, as mentioned, in a long run, it's looking to the upside. We just need to watch out for this short-term volatility. But as for now, as long as the oil market is looking to the upside in a general direction, that will support Canadian dollar. But the risk for the Canadian dollar really comes down to the NAFTA deal between Canada and US. But if you're looking at the global sense right now, US is not stupid. Donald Trump is not stupid. Look how he reacts to China right now. He knows that for some major country, he just cannot really push them aside. For Mexico, on the other hand, he is toughened up to the immigration. He is toughened up to Mexico because he know basically US is a way much bigger bully than Mexico. So there's not much Mexico can do in terms of fighting, battling with US. China, on the other hand, has so much to offer and to take away from US. And same thing applies to Canada. As mentioned, look at what happened to the 2 pipeline already, that US needs the energy resources from Canada. So that's why, and they also need the global coalition for the terrorism from Canada. It's basically the northern neighbors. So it's very unlikely the two-nation relationship will deteriorate over the NAFTA deal. And even if the NAFTA deal renegotiate in different terms, it's very unlikely the energy sector will be suffered. So because of that, we don't think the sentiment is too risky for Canadian dollar. Of course, you still have to watch out for the future, especially for the tax plan, to see if Canada can exempt from the import tax. Nevertheless, today we will have the employment data from Canada, and as mentioned, we had already had a good GDP data last week. We had a positive employment data previously. So if today we can have another good employment data, then you will think Canadian dollar will be a good currency to buy. So I'm looking to buy by this sentiment. If today we have a negative, I'm not looking to sell Canadian dollar basically, because I think the fundamental speaking and sentimentally speaking, it is going to the upside. So I will use the risk events to get in. If we have a risk data, I will just stay in the sideline. Of course, if we have a very negative data, then you can still sell it depending on what currency it's positive, I think Aussie CAD will be a good choice. For Australian dollar, it's once again a rising start from last week's trade balance to this week's RBA statement to yesterday's government laws speaks to today's Chinese trade balance. It's continuation of good sentiment, good fundamental data to support Australian dollar. So we think it's really a one-way street to the upside down. I see very little factor to push it down right now. Next week, we do have the employment data only until Wednesday. That might be a roadblock, or that might be another fuel to push it up. But right now, I really think even if tomorrow you have a negative press conference, I still don't think that's going to affect Australian dollar too much. It will cause a short-term volatility, but you got to look at the bigger picture right now. Australian dollar have a much bigger important relationship with China. And as long as Chinese is strong, then doesn't matter what happened politically in US, Australian dollar can still be beneficial. Same thing applies to New Zealand dollar. I know we have this short-term setting from yesterday's RBNZ meeting, but that does not change the fundamental strength of New Zealand dollar. Especially today, if you look at the Chinese data, it's just still a very strong picture for New Zealand dollar. So I'm still favored to buy New Zealand dollar. Of course, you have to avoid this kind of short-term volatility, especially if you are trading at an intraday perspective. But in the daily perspective, this will just give me a better room to enter at New Zealand dollar in the future. So don't forget, New Zealand dollar is still an attractive currency due to its fundamental strength. It's good CPI, it's good GDP, and it's good labor market. Not good, but not negative for the labor market. And the GDT, the global dairy price, continue to pick up, and they are still the highest yield currency among the G7 countries. They still have the very stable political situation, and that's why I'm favored to buy New Zealand dollar. For Japanese yen right now, it's been sold off due to this new fresh sentiment, but I will not get into Japanese yen either for now for the daily trade. The reason is because you have this kind of risk events that's large enough to change everything around, right? From between Japanese Prime Minister and Donald Trump. Not only tomorrow you have the press conference, they are going to have a meeting for the weekend. So that means Monday they will have a more announcement to come. So on top of this kind of volatile events, I don't want to place any sort of daily trade into it. Of course, you're interested to trade the intraday trade. You could write a sentiment, but tomorrow the press conference can't change everything. So watch out and be careful to not get caught up into it. For Swiss franc, there's no major news, still a fundamentally negative currency. But if we have a continuous of risk on sentiment, that will pressure Swiss franc even further to the downside. However, if the risk sentiment deteriorates, if tomorrow you have a very negative sentiment, then Swiss franc will be a good buy. So, I don't have any trade today personally, but let's take a look at the daily chart. So first thing first, if you look at my previous, let's take a look at New Z first. So New Z from this huge drop yesterday, a little bit pick up, drop further to the downside, break down 0.72. Now we are slowly finding the support, but because US dollar is getting strength, so if you look at New Z yen will be a better, you see, will be much better picture. You have this huge drop and an immediate recovery right away. So if you look at 4-hour chart, you see same thing. You're finding support, but above 80.50, and then it's a continuous of green candle for the previous, more than 24 hours. So this is what I say. Sometimes you could grab this kind of trade when you see a huge drop on something that does not fit into the fundamental picture. Of course, I get caught twice for dollar yen and euro yen already. So for me, my execution is not good enough. I still figuring out a technical way to enter it. But fundamentally speaking, or sentimentally speaking, that's a strategy that you could play into it. But then again, you have to. I still couldn't figure out. I'm trying to use 4 hour, trying to use hourly, but I don't. I just think it's a low winning rate strategy, because basically you're going against the trend, and this picking up today really largely benefit by the Chinese data. So just imagine if you have a negative Chinese data trade balance, then you will see continuation of downside to the New Zealand yen. Then that will be already catching the falling knife. So I will do more thinking and tasting to see, but I do like the logic behind this kind of trade, because market always have this kind of crazy volatility. You have the same thing applied to British pound back then. If you take a look at cable back then, for the Theresa May to announce the Brexit plan right here, huge drop and then continuation of upside. So I'm very interested in this kind of huge drop, which fuel up by the sentiment, but does not supported by the fundamental. Maybe not cable, but if you look at pound yen, those are very good way to trade when you have those kind of huge drop right here, huge drop only to recover very, very fast. The same thing happened to Brexit, US election. And I think 2017, the reason I say it, because I think the global geopolitical situation is getting very, very sensitive. So you will have more and more of this kind of trade coming up. Question is, how do you benefit from it? How do you trade this kind of trade? That's more a difficult part for me to figure out exactly how to basically trade this kind of trade. So my previous euro yen trade, which I got stopped out, but look at what happened today. It again picked up greatly. So you can say that I got in too early. My logic was correct, but it's no use when your execution is not good enough. So understand that trading is not only about the analysis. Your execution is where the technical analysis comes in. Execution is very important. So you have to understand that side. So unfortunately, that's what happened to me, and that's pretty much it for me to recap. And let's take a look at the daily chart. So first thing first, I want to quickly update. I do have a daily trade today. It's from Pound Aussie. So I got in this trade. First of all, the fundamental picture is great because Australian dollar is proven to be very strong right now. Pound is not really negative for now, but if I look ahead to the future, I think there's more negative sentiment that might play into British pound. Today, of course, we have this nice kangaroo tail, not significant enough due to the quiet market sentiment. But I think technically we are looking to the downside. There is enough room to go to at least 1.60. So for me, that's why I got into this trade. For me, that's basically fundamental pictures is in line with this trade. Okay, so let's take a look at other currency. Now, Euro Pound, you do have this nice kangaroo tail, but it's not a pair I will particularly buy or sell. They both suffer right now, especially Euro Dollar. For me, it's only a sell. So I'm gonna ignore this signal. Euro Dollar continue to drop, but very interesting. You don't have a huge drop to the downside. Its market is still very prevention mode. Basically, it's very scared of what happened tomorrow, because we already witnessed how strong the sentiment can shift just from Donald Trump himself. So market, most large money is not going to jump in right away, especially when you have risk events like Trump and Prime Minister Abe over the weekend. At least that's my strategy. I'd rather stay out than sorry. Euro Aussie, on the other hand, is a good sell, but there's no signal here. Euro CAD is also a good sell, and same as Euro NewZ. Now Euro NewZ might be the only possible trade since you actually climb up in this nice area. So I'm looking forward to see any reversal signal for me to get in at this area. And Euro Yen, again, a huge green candle. So again, we are a little bit early yesterday, and that's why. But not something I will get into it. I'm not going to get into dollar trade or Japanese yen right now, especially prior to the weekend. Pound Swiss, nothing much going on here. And look at cable. Again, cable, you have this nice, it's not a kangaroo tail, but nice reversal signal. But we are not going to get into dollar trade for now. Pound Aussie is the one we are in.